If you've been following my trading, you know I've been implementing Bookmap and Cumulative Delta to my day trading strategy. Well, it's been about 2 weeks since I've tried them out, and I just want to give you guys an honest and transparent update on how my trading's been going so far and go over the basic concept to my new strategy. I will make an in-depth video once I've tested this for at least a month and be profitable. So without further ado, let's dive right in. I was initially trading NQ minis before implementing Cumulative Delta, but after blowing my PA account, I decided to take a step back and stop chasing money and size down on my trading until I prove myself to be consistently profitable for at least 1 month. Just to spice things up, I went ahead and started trading micro ES futures, and on Thursday, January 18 was my first day trading with this new strategy. I was able to take 2 profitable scalps aiming for at least 1 to 2 risk to reward or higher, but I ended up with a partial profit of an average of 0.4 R multiple and a profit of $85. Then on Friday, I was patient with my entries and took 2 total trades, and the first one was a loss of $45, and the second trade hit an R multiple of 2.14 for a nice $107.50 win on the day with those 2 trades. I ended the week up $192.50, and it was a great start. Then on the following week, I averaged around 3 trades per day, taking the highest quality setups and being patient. But unfortunately, I ended that week with a minus $195, so I was pretty much back to break even. But I gotta say that trading smaller size and using Cumulative Delta allow me to be a lot more comfortable in the trade, since I'm not focused on the profit, but rather having an R multiple of at least 2 to minimize my losses and let my winners run and make up for the loss. But I realized that a lot of the trades that I take on ES had greater impact on the NQ, meaning NQ moved a lot more and often reached that 1 to 2 risk to reward, while the ES trades did not and quickly reversed on me, putting me at a loss. So as of today, January 29, I started trading micro NQ futures to see if I can implement the same strategy and have a higher win rate. My current win rate is 39% with an R multiple of 1.5. My only problem right now is that I'm hesitating on my entries, which could have made me profit and also getting my win rate higher by taking the best possible setups at key levels. With that said, I'm just gonna say that implementing Cumulative Delta to the core of my strategy has been an absolute game changer in terms of patience and providing me a better conviction to place my trades. First of all, if you don't know or have never heard of what Cumulative Delta is, it's basically the offer volume minus the bid volume in the market, and it is plotted on the chart like this. We can assume that when the Cumulative Delta is positive, we have stronger buyers in the market, and vice versa. When the Cumulative Delta is negative, typically the sellers are in control. The price usually follows the Cumulative Delta and they typically correlate with each other. Now, the way I use Cumulative Delta is to find divergences and take a reversal trade in the market. Because when a price comes to a key level, such as swing high or swing low, and the delta is not at the same level previously, then that usually is a good sign of a reversal. For example, here we have the Nasdaq 100 futures chart on a 5-minute time frame. We can see that this area was high of day and we had a retracement back down. The next time we came to test the area, we made a double top but sort of failed to make a significant higher high. On Cumulative Delta, we can clearly see that the delta was moving higher. What this shows is that there are more limit sell orders absorbing the market buy orders to hold the price down. This is also called an absorption, and it's a good sign of a price reversal. You can see that we then came all the way back down after that divergence. Then after we came down from the move, we hit the low of day, making a double bottom. However, this time the Cumulative Delta failed to get close to the previous delta, and this is called exhaustion, where there is a lack of selling pressure in the market to push the prices down. We can see that the price reversed right after until it came to the previous resistance. In essence, you should never use cumulative delta on its own without combining with other confluences such as support and resistance, volume profile, or swing highs and lows. For now, I'll stick with utilizing this indicator, and I will give you guys an update video soon. But remember that this indicator alone will not make you profitable, and I have implemented and fixed 2 things in my trading which I talk about in this video. Thanks for watching. Peace.